In today's video, we're going to take a look at Google, and the last setup that we had on the daily chart was pretty much based on symmetry. We had some symmetrical projections that all came together, and it also just happened to overlap the area of a 618 retracement of this prior larger swing. Okay, so it hit, it held, it obviously triggered entries on multiple time frame charts. And we've met one major target, but we still do have another higher target at this 1669 area. So how do you know when this is over? So that's the question that you want to ask yourself. Well, one of the things that you can do is you can look at the symmetry. Okay, and that is basically, again, similarity or equality when comparing swings in the same direction. And here, well, I'll be able to show you at least one projection here. This looks like the largest projection since that last low was made. And basically, that's where that lower end of the symmetry comes in. So for example, if we hold above here, then yes, I do think that we can continue to see a rally and maybe test that second target at the 1669 area. However, if we do break underneath this area, that would actually be a good place for a stop. But if you do decline for more than these prior declines within the uptrend, that's the first indication that, you know, this rally that started back here is terminating. Okay, what it looks like on a 30-minute chart is like this. Okay, basically, you know, if you look back over on the left-hand side of the chart, you can see that the trend is still intact, as many of these swings are similar, you know, or have been similar to the other swings, and we're still, you know, holding above that area. So if we do continue to hold above symmetry, I am going to look for another swing up with, let's see, minor targets of 1654 and then 1662 to 64. But if it starts coming back down below that symmetry support, then I would be out of this trade. Okay, but that's just an example of how you can trail up stops when you get involved in some of these setups.